What is up guys, Taiki here, and in this video I want to go over why I believe Abracadabra is going to flip MakerDAO, a case study on tokenomics. If you like the content, please like and subscribe, leave a comment in the comment section below. None of this is financial advice, so let's get started. Okay, so I wanted to piggyback this video off of a tweet that I made roughly 2 weeks ago when I mentioned that, hey, SPELL is probably going to flip Maker, and that's a good thing. When the incumbent gets complacent and doesn't innovate, a better product will take over. Bullish innovation and innovators. Long, Danny. Well, who is Danny anyways? Well, Danny is a DeFi developer that's really taken over the DeFi industry by storm, essentially launching 2 successful projects in a row, Abracadabra, Wonderland, right? He also has a new project coming soon, which is called Popsicle Finance, but that's besides the point. Essentially, he's a super charismatic leader, really vocal about the issues, I guess in like the old DeFi per se, right? And he's led this, I guess, transition to like DeFi 2.0, where he's really made me rethink about, what does the future of DeFi look like, and what kind of tokenomics are just better models than what we've had in the past. So I think a good example to kind of illustrate this example is just by going over Maker DAI and comparing that to that of Abracadabra and the difference in tokenomics. And then, after going through these examples, I'll have some summaries and takeaways on why this is important. Okay, so let's go over, before I get into it, full disclosure, I'm farming SPELL on the Phantom ecosystem. I took this screenshot like a few days ago, so I only have like $100 to $200 worth of SPELL. I'm just just full disclosure, like I didn't like fill my bags just to make this video, right, to pump it, but I am farming it, if that, just full transparency. But anyways, MakerDAO, let's go over MakerDAO. So Maker launched DAI in 2017, right, the decentralized stablecoin, which is an over collateralized stablecoin using crypto assets as collateral. So if you want to mint DAI, you can take assets such as Matic, ETH, or even GUSD, post it as collateral, and mint DAI, right? It's an over collateralized stablecoin, and it's I'm sure like if you've been in DeFi, you've used DAI before, right? Like you can use it to yield farm, etc. It's got $6.5 billion in market cap, so it's fairly like widely used everywhere. However, if you look under the surface, you realize that hey, it's not actually a decentralized stablecoin because DAI is actually backed roughly 50% by USDC, and over half of, I guess, DAI is backed by centralized assets, which this kind of makes like me feel like not so great actually, because DAI is essentially just a wrapped version of USDC, and the decentralized stablecoin narrative is just a meme, right? It's not actually real. If like the government wanted to shut DAI down, then they just go to Coinbase and like the Circle and like get rid of USDC, right? And then DAI is like not stable anymore. And also, I've been in DeFi for a relatively long time, right, in crypto, but like I don't actually really know anyone that uses MakerDAO, right? Like I actually do not know anyone. I've used Abracadabra, right? Like it has great use cases for me, but like, do you know anyone that uses MakerDAO? Because I don't, right? Like who's actually using it? Is it the whales and VCs that's trying to pump their bags? I know some people are like using a MakerDAO to like go over like arbitrage opportunities, right? When the price of USDC and DAI is off, you can take USDC, post it as collateral, mint DAI, and then arbitrage that away. But if that's the only use case for DAI, then like that doesn't really pose a bullish narrative for MakerDAO, because if people are just using it for arbitrage opportunities, then like it doesn't really have a long-term narrative. So obviously, it's in my opinion, I just see DAI as a backed version, or like a wrapped version of USDC, and that's why Magic Internet Money, MIM, right, which is the over collateralized stablecoin of Abracadabra, is so powerful. Because Abracadabra, like what it allows you to do is it allows you to use interest-bearing assets to borrow MIM, an over collateralized stablecoin, right? So you can take any asset that's yield-bearing, post it as collateral, and borrow MIM against it. And with MIM, you can use it across many chains: Phantom, Avalanche, Ethereum, Arbitrum, many chains. They're expanding to all sorts of chains. It's got a lot of utility. MIM, unlike that, is less susceptible to a central point of failure, right? Because sure, some MIM is backed by USDC, but it's not like 50%, right? It's actually backed by decentralized assets that's yield bearing. So here's an example of what you can do what you can do with Abracadabra. For example, you can take SUSHI, right, or xSUSHI, which is an interest-bearing version of SUSHI, which yields roughly 10% a year, right? So you can take your SUSHI, you can stake it on SushiSwap, and then you can earn a part of the trading fees, right? It's an interest-bearing token, and instead of having it sit in your wallet, you can actually use it as collateral, borrow MIM, and then with MIM you can yield farm, earn 20, 30, 40% across the different yield farms. It actually allows you to unlock, I guess, the equity behind the xSUSHI token. And I guess the only thing that you pay to the protocol is if you get liquidated, well, you pay a 5% fee. And you also you also pay a 0.5% borrow fee and 0.5% interest. But if xSUSHI is appreciating 10% a year and you don't really intend on selling it, then this is a great thing you can do, right? As you can just borrow a safe amount of MIM, and you can yield farm across different ecosystems and earn 20, 30, 40% interest pretty easily. And it's just a really good app, right? I've used Abracadabra for sure. And like I mentioned, yeah, I've used it. It's a great product. I've never used MakerDAO, and I don't really want to, right? If I want to borrow DAI, or if I want to, take my assets as collateral, borrow against it, I can just use Aave, right? And I don't have to lock up my assets. And like with all the, I guess, yield farming, liquidity mining incentives, there's really no incentive for me to use MakerDAO. And MakerDAO lives on Ethereum. They were never interested in expanding to other ecosystems, and it's just not really a user-friendly product, right? It's mostly a product made for whales and I guess people that's used DeFi back in the day. And it's not really modern, right? They haven't really changed their model since then. And there's this really, really cool website called Bye DAI.money, where it kind of goes over, it's like made by, I believe, the Abracadabra team. And they're essentially saying, okay, like we're a better model than DAI. We're a better model than MakerDAO and DAI, and we're going to flip them. And, they're slowly, taking over market share. And when I first started seeing this, like the SPELL market cap was like 20% that of MakerDAO, and now it's over 50%, which is pretty nuts. So you can see that the Abracadabra TVL is at $3 billion, and the market cap of SPELL roughly 1.3 billion. Whereas for MakerDAO, $16 billion in TVL, when the market cap of Maker is only 2.3 billion. I find that really, really interesting. So this goes on to the tokenomics, right? This is a good transition to go over like what actually is the difference in tokenomics and why is like the market cap of Abracadabra so much higher than Maker, or I guess if you take the ratio of TVL and market cap, like why is it more favorable to Abracadabra? Like what's their model? Well, let's first go over the Maker model, and I guess understanding the Maker model will allow you to better appreciate SPELL's model, right, which is the native token for Abracadabra. So MKR is a governance token, right? I'm not a huge fan of governance tokens, but I'll just read this here. Maker Tokens Act has a kind of voting share for the organization that manages DAI. While they do not pay dividends to their holders, they do give the holders voting rights over the development of the protocol, and are expected to appreciate in value in accordance to the success of DAI itself. Well, I kind of already posed a relatively bearish bearish case for DAI, and it is a governance token. It doesn't really pay you dividends. You can vote on proposals, but like most tokens are owned by insiders anyways. So like who actually wants to hold this token? I don't want to hold this token, to be honest. And this is the Maker ETH chart, right? So this is taking the price of Maker and dividing it by the price of ETH. And it's just in the perpetual bear market, and it's not going to change anytime soon. This chart essentially shows that like if you've ever bought Maker like in the past, let's say like 3 years, you're like 99.99% of people were just better off like buying ETH, right? Because Maker just underperforms ETH, which like if you're taking on more risk, like buying an altcoin like Maker, like you better expect it to outperform ETH. And sure, sometimes it has its pumps, but generally it's in a bear market, right? And you shouldn't really expect this to change anytime soon. But the difference that SPELL has is that it's a revenue share token. If you take your SPELL and you stake it into the protocol, you get to earn part of the protocol fees. So, MakerDAO, the MKR token, like there's really no incentive for you to hold the token. But SPELL, if you're bullish on the protocol and you're bullish that the TVL of Abracadabra is going to go up, well, you can take your SPELL, stake it, and earn part of the protocol fees, which is really interesting. So Maker is a governance token, right? And generally governance tokens I'm not too bullish on. And SPELL is a revenue share token, right? If you stake it, you earn part of the protocol fees. And if you're bullish, then people are incentivized to buy and stake. So the importance of that is that as long as the TVL goes up on Abracadabra, the value of SPELL should also go up, since it directly translates to higher fees, right? Because if more people are depositing assets as collateral and then borrowing MIM, then that means that they are paying the interest rate, right? Like the 0.5% to 2% interest rate. If they get liquidated, they pay a 5% fee, which goes to Abracadabra, SPELL holders. And like when they borrow, they also pay a fee, which also goes to SPELL holders. The same cannot be said for Maker, right? If the TVL of Maker like doubles tomorrow, right? The token will probably go up because like everyone's like, oh my god, TVL went up, but it doesn't really affect anything, right? Because like you don't really get a part of the revenues that MakerDAO makes. It's just a governance token that you can vote on proposals for, but like your vote doesn't really matter because it's mostly held by insiders, right? It just doesn't really make any sense. And like I mentioned, yeah, like if you like stake SPELL, you get part of these fees, and if TVL goes up, then you know that, hey, like the protocol is earning more fees. Oh, staked SPELL holders earn more rewards. Oh, that's more additional income. Oh, there's more demand for SPELL, right? Just better tokenomics. And this is like the whole DeFi 2.0 narrative where, you know, like these, I guess, newer DeFi projects looked at whatever that existed and was like, yeah, that's not a good model. Let's change it up. And that's kind of how it works there. And I kind of repeat myself there. And this is what's really, really interesting, right? I already mentioned this, but the Abracadabra TVL is 3 billion, but you know, SPELL's market cap is over 50% that of MakerDAO, or even though Maker has like roughly 5 times more TVL than SPELL, right? It's just better tokenomics, better token value accrual, and you know, people just actually want to hold the SPELL token, right? And if you look at the ratio, right, taking the market cap to TVL ratio, Abracadabra sits at 43%, MakerDAO 14%, right? And this just means that, you know, Abracadabra has better tokenomics. And you also see that SPELL fees, or people that stake SPELL, earn twice as much more fees than, you know, whatever the protocol makes. So, you know, if the protocol benefits, the token holders benefits, right? Whereas for Maker, you can't really say the same. So, you know, I don't want to bash on MakerDAO too much, right? It's kind of been like it's kind of like the beating a dead horse, because like a lot of like the crypto natives and DeFi natives kind of bash on MakerDAO. But you know, MakerDAO is an amazing protocol. It kind of led the way to, you know, this innovation in DeFi, and you know, they are battle tested, right? They've survived, I guess, the March 2020 crash. They survived the May crash, and you really can't say the same for Abracadabra because it's so new. But you know, if you just look at, I guess, the technology and like what the product is, and like how, I guess, DAI and MIM is designed, it's objectively, it's hard to be more bullish on Maker than for Abracadabra, right? We're in 2021, not 2017. You know, we just use a better product, right? We don't really care like how early something was, right? And Abracadabra already has 3 billion TVL, so you know, the market thinks it's like safe. So, you know, to wrap it up, you know, Abracadabra is on the verge of flipping Maker, right? And this is really important for a few reasons. And I guess as a farmer and kind of like a fundamental investor, trader, whatever you want to call it, it's really important because it shows me that incumbents can be flipped, right? If a better product comes around, right? If a better team comes around, builds a better product, like builds a stronger community, you can flip like the incumbents. And sure, it hasn't flipped yet, but I don't really see a scenario where it does not flip, right? Unless there's like some unfortunate exploit or rug, which is really unlikely at this point, but you know, that's how I think about it. Secondly, multi-chain projects are more valuable for now, right? In like 5-10 years, if all the value accrues back to ETH, then yeah, multi-chain might be a meme. But in the meantime, ETH is unusable, ETH layer 1 is unusable, even ETH layer 2 is like arguably unusable with like roughly $5 to $10 transaction fees. So protocols that can tap into these different ecosystems with liquidity mining incentives are just going to earn more fees. And you know, it'll allow users like you and I to actually use these protocols and actually understand them better on a fundamental level, which is like more likely to grow a better community, which is more likely to earn more fees. Lastly, revenue share tokens are more bullish than governance tokens. This isn't revolutionary, right? I'm not saying it's like something that's like, you know, super crazy, but I mean, it's just a better tokenomics model. Is it a security? Who knows, right? I'm not here to argue like whether or not it's a security, but you know, from like a more, I guess, investing, trading, like fundamental perspective, revenue share tokens are more bullish than governance tokens, where your vote doesn't really matter, right? And you might be like telling yourself, hey, like, or asking me like, hey, like, but Maker has a buyback and burn model, right? It's not just a governance token. It buybacks and burns. It's burning so much Maker. I'm bullish. Okay, sure. But it's not the same as the stake to earn revenue model, right? Because there's this website called MakerBurn.com, right? And you can kind of see, oh, it's actually burning Maker. Like, but like, why isn't this bullish the token? Like, why is the price of Maker just going down perpetually, right? Why does no one want to hold the token? Well, Tetranode, who is one of the Ethereum whales on Twitter, he's actually a pretty good follow. And he kind of says that he's not a fan of buyback and burn. It basically gives the whales exit liquidity, and I agree with the sentiment. If the system buys back and burns, well, price goes up, and you know, anyone that wants to get out can sell. Like, system does that again, well, they can just buy back and sell. So you know, like a revenue, like if you I guess the SPELL model of like, if you have to stake SPELL to earn revenues, like that model, I guess creates a more of a commitment and more demand to hold a token. Whereas, you know, buyback and burn, sure, like it might be great in the short term, but it'll just give people exit liquidity like whenever the token goes up a little bit. And DJ Spartan, also a good follow. He's kind of like a retired, like a shit poster now, but he also has been bashing on the Maker ETH chart as well. At the current Maker ETH price, 99.99999% of current holders would have been better off in ETH terms if they never touched this unholy cursed coin. Soon, 100%. And you know, if you're holding Maker, what are you looking forward to, right? Are you just praying that SPELL and MIM blows up and it just goes to zero, right? But like still, like no one would use Maker, or like I wouldn't use Maker, right? DeFi suddenly becomes hot again, and there's, I guess, more arbitrage opportunities and more DAI gets minted. Well, then that it doesn't really matter, because like longer term, like that's like if your whole use case is for people like whales to arbitrage like stablecoin pegs, then like what even is that? U.S. funds. Okay, I'm not really gonna go into the other points, right? And like recently, MakerDAO announced like this proposal of like having it be like a climate friendly ecosystem or project. Which I mean, I appreciate that they're trying to be climate friendly, but you know, like I feel like they're trying to grasp at straws there. So in summary, unless there's an unfortunate exploit, I don't really see a scenario where Abracadabra does not flip MakerDAO, just because the tokenomics are superior and it's the better product, right? Like I just use better products. Like, you know, at the end of the day, as a DeFi user, as a farmer, I'm gonna use products that, you know, make me money. And great, like Abracadabra is a great product because I use it to make money, but I also have to pay fees to use it. But you know, because I'm making money through Abracadabra, I have no problem paying interest rates. I have no problem paying the borrow fee. And at the end of the day, Abracadabra, they're multi-chain, they're a great project. I recommend everyone, you know, try using it. Not financial advice. And there also is a really good farm on Phantom, right, where you can just take dollars, stake it, and earn SPELL tokens, paying roughly 25 to 30%, which is currently what I'm doing now, because you know this price of SPELL has gone up a lot. I expect it to do, you know, I expect it to keep doing well. However, you know, I'm just comfortable using my Bitcoin ETH as collateral on money markets, borrowing dollars against it, and then farming SPELL with it. You know, like I guess to indirectly earn SPELL tokens. I'm farming SPELL tokens with my Bitcoin and ETH, right? And that's kind of how I navigate the markets. Sometimes, you know, you're bullish an asset, you think it can go up, but you know, if you can farm with stables, sometimes that might be a good way to go. So thank you guys for watching. Have a good one out there, and go Frog Nation. If you want to know how I'm navigating the markets, check out the private Discord. Link is in the description below. Thank you for watching, and have fun farming out there.